On this episode, we're going to discuss business acquisition strategies, most frequently asked questions regarding the SBA 7A loan.
We wanted to take a deeper dive than normal and have Beau answer a few questions that we frequently get asked about business acquisitions.
Have you thought about buying an existing business? Do you want to learn the top tips to use utilizing the SBA 7A loan for business acquisition? Well, this is the episode for you.
Being a commercial finance advisor, what are some of your insights about business acquisitions right now?
There's a great opportunity to grab this space. Service-based businesses are on the rise. I mean, your water heater goes out.
What's better, buying a franchise or buying an existing business?
Maybe you don't want to start a home service business. Maybe there's a franchise niche that's home-based. It's more up your alley.
If I wanted cash flow from day one, should I buy an existing franchise or business?
It's amazing to see the ones that have gotten in, like there's kind of standard margins of different industries.
First off, since a lot of our viewers are asking about buying a franchise, one of the first questions we always get is, how can I buy a business with as little out of pocket as possible?
On a business acquisition, you can get financing up to 90% of total project cost. So that's the purchase price of the business. You can build in working capital, employees' compensation. The total project cost, you can finance up to 90% of that. Then you can get some seller carryback and do things from there. But 90% financing with the SBA 7A for cash flowing businesses.
So you talked a little bit about seller carryback and things like that for business acquisitions. Can you explain what seller financing is?
Diving deeper into this, if let's say you found a business you want to buy, existing business, and you knew you could potentially get 90% financing, total project costs from the bank, well, you still got to come up with 10% of equity injection. So let's say the total project cost is $1 million. You got to come in with $100,000. If the seller was willing to carry back 5% and put that 5% on standby, meaning they can't get payments for the term of the loan and there can't be a balloon payment, it's almost like they're leaving 5% equity in the deal. Then in that circumstance, you only have to come in with 5%, which is $50,000 of the total project cost. And those funds can come from a gift potentially or come from an investor.
Just confirm, the borrower can get that 5% as a gift, right?
Yeah. So yes, that's true. That money can be a gift. It can't be borrowed funds from, a family member. It would have to be a gift.
Okay. Now, since you use SBA 7A financing with a lot of these deals, what is the loan process from start to finish and how long does it generally take?
So on a 7A, express loans are smaller loans, typically up to $500,000. They just moved it up. It was $350,000. But those deals can generally close a little bit quicker. The traditional 7A deals, the time a term sheet is issued, they could be anywhere from 30 to 90 days to close, depending if there's real estate involved and different caveats like that. The documentation on a business acquisition is you need 3 years of seller's tax returns and an interim financial statement from the seller. You also need like an aging report, depending on accounts receivable, things like that as you progress. On your end, as the buyer, you need 3 years of your tax returns. If you have any other businesses, you need business tax returns for them. Any affiliate companies, you have to provide your tax returns. Any other businesses, you have to provide a debt schedule, financial statement, and that's the initial paperwork you need. Once we identify the bank, then there's some additional paperwork, but it's really not that bad. It's no worse than any bank loan you're going to get.
Okay, it seems like in a lot of cases, the SBA 7A loan is a great solution. What are some reasons you wouldn't want to go with SBA financing?
Okay, so some reasons why you wouldn't want to go with SBA 7A financing is you might have a lot of write-offs and show losses, and your global cash flow might not make the deal make sense. You have other real estate holdings and you're writing off everything, you show no gain, so your global cash flow just wouldn't support a 7A. Number two is it's a full document loan. We got to get tax returns on you, both you personally and on the business you're buying. So if the business you're buying is really weak, might not be the best 7A. SBA also requires a personal guarantee. And then the other reason you might not want to go 7A is, let's just say you had $1 million of equity in your primary residence and you are buying a business that didn't have any real estate. It was just intangibles or blue sky. Then there's a collateral shortfall, and the SBA guidelines say that we have to look for additional collateral. So then they would put a secondary lien on your house with that $1 million of equity. So some people don't want to have to collateralize a primary residence or an investment property. So that's generally why people wouldn't want to do SBA. Everything else is definitely pros and advantages, higher leverage and many more benefits.
What is the maximum you can get with an SBA 7A loan for a business acquisition?
The max you can have is 5 million in SBA proceeds. That could be several different SBA loans. There's caveats if you use the 504 loan, but we're not talking about that. But in general, 5 million. Now, let's say you were looking to buy a larger business that had a purchase price of like $9 million. You can do, some banks do a conventional loan in conjunction with the 7A. So you can, in theory, get any $7, $8, $9 million of total funding with a SBA 7A and a conventional piece, which we call pari passu. So they're essentially kind of like both first liens.
Being a commercial finance advisor, what are some of your insights about business acquisitions right now?
I mean, everything I see is that there is more and more people realizing that there's a lot of retiring small business owners that don't have succession plans. So there's a great opportunity to grab this space. I think a lot of people in the real estate investing space are kind of realizing that, hey, wouldn't it be great to own a cash flowing business and I could still own my real estate and do it in conjunction? I think it's service-based businesses are on the rise. I mean, your water heater goes out. It costs you $1,000 now. It used to be $500 or $400. Actually, no, excuse me. It just cost me $1,600 or $1,700. So HVAC companies, plumbing companies, tree trimming businesses, all these boring service-based businesses are really the blue sky for entrepreneurs. So I think more and more people are realizing that they can buy these businesses and leverage SBA financing and come in with as little as 5%. That 5% could be an investor that comes in. So for me, looking at the investment opportunities that, maybe I don't want to run the business, but would I be an investor in multiple businesses? Yes, I think you're seeing more and more of that. You're seeing people that are starting holding companies that own different platform businesses. Like they might own a roof and gutter company. They might own a roofing company. They might own a garage door company because they kind of cross sell themselves. So I think it's huge opportunity. It's almost like a gold rush right now in small business acquisition.
What are some great resources that might help people with their own business acquisitions? Books, courses, things you can read. What do you think?
I recently bought Buy Then Build by Walker Diebel, I think you say his last name, Buy Then Build. And he talks about how he tried to start a business from scratch and he failed. Ultimately, he ended up acquiring a business, existing business, and then he bolted on the business he was trying to start. And he grew that and he grew multiple businesses. So I do believe that it's a fantastic time to buy a cash flowing business. Look, you can go out there today with little to none of your own money and acquire a revenue stream. So if you were thinking about quitting your W-2 job, how would I do it? I would figure out what industry or segment I want to be in. And that's why the book's really good, because he niches down he gives you ideas on how you carve out and build your buy box. You need a buy box to figure out what are you looking for and what are your parameters for your buy. But I think it's a tremendous opportunity. So I would start there. I think that book is really good. I think, Cody Sanchez on YouTube, all her short form, she brings on different people that have started businesses. I like that. You can listen to our show, Investor Financing Podcast. We bring on different franchisors. We bring on entrepreneurs and business owners. So I think by just plugging in and learning about the opportunities, I never thought about home service business being so lucrative. A lot of them, you don't even need a brick and mortar location. Today, I was just on a call with a franchise company, and they do biohazard cleanup and meth labs, and I mean it's something they clean up murder, but the margins on this business is just amazing. I mean, some of the jobs they make $2,000 an hour. I mean, and it's like things that people don't want to do, but it's an extremely lucrative business if you get into it. So, but definitely interesting franchise concepts out there in existing businesses. So, I mean, the sky's really the limit with these options, but I would start with Buy Then Build for sure.
So you mentioned you're working with entrepreneurs and other people who want to purchase franchises. How does SBA financing work for buying a franchise?
So it's a similar way, right? We're gonna figure out what the total sources and uses are. What's the total project cost, franchise fee, marketing costs, inventory, you name it, right? That's going to be the total project cost, SBA fees. And then some banks overlay and they'll say, hey, we're willing to fund 80% of total project cost. But the SBA guidelines say that they need at least a 10% equity injection. So some banks will allow that. So you can on a franchise startup, you can potentially only put in 10% equity injection. And also there's other ways of financing these franchises. You could do Rob's rollover. You can do that for business acquisition. So if it's not SBA 7A or an Express, there are other ways, but really it's the same process. Although we used to have the franchise directory, they got rid of it. So the lenders want the franchise disclosure document, the business plan. They review the franchise disclosure documents for litigations and like all the different sections in the franchise disclosure document that might trigger it not being a SBA eligible type of franchise. But since they got rid of the directory, if it makes sense, they can still do the loan. So it's just if it's an ineligible business or if there's like a third party manager and you're not really in the business, sometimes there's some caveats there. But all in all, you can still get 10% equity injection.
So you mentioned some interesting niches that people are looking into. Like I think you mentioned biohazard cleanups and murder scenes and stuff like that. But what other kinds of franchises are your clients purchasing and in what industries besides those you mentioned?
There's one franchise concept that does placement for seniors into different assisted living facilities and memory care facilities. That was a pretty interesting business. The one I really liked here, cleaning businesses are popular right now. Fitness industries, pretty popular. Med spas are very popular. Staffing companies, there's some franchise staffing companies that are pretty popular. And then there's a lot of home service franchises. There's one franchise concept and what they do is they do like the 18 essential filter changes, all that kind of stuff. And it's actually, if you have a property management company, it's required by law to do these type of things. So they contract with different property management companies. So they have a huge book of business. They just actually struck a big deal with a major property management company. So there's lots of opportunity in the home service world.
All right. So you've kind of talked about two broad themes here, business acquisitions and franchises. What trends are you seeing in 2023 with respect to either or both of those themes?
I think that the thing I see the most is that there's more and more people pursuing opportunities in business acquisition and franchise acquisition. So my guess is that trend is going to continue for the next few years. People are ready to build their own legacy on their own dime, and I think people are willing to risk. They want to build not that they don't want to work hard, they want to work hard for themselves. And so whether they're buying an existing business with no franchise or they're starting a franchise because they like the concept and they want to build within a system, I think that trend is here to stay. So I believe that the franchise world and business acquisition is going to be emerging even more so than it already is over the past couple of years. The last 3 years, it seems like there's a huge uptick, and I think that's going to continue. So I see a big trend up.
And do you see like an overall increase in the supply of existing businesses that are going up for sale, especially as the population ages and we get to that, I've heard it called a silver tsunami. Do you find that kind of like a lot more people are looking to get out of a job and into their own business, but also at the same time, there are a lot of people who want to retire and get out of their business and, kind of reap the rewards of all the hard work they did? Are those two things coming together? Like, seems almost like magic.
Oh yeah. I forgot what the stat was. We researched it before, Bill, and I can't remember exactly. But there's essentially millions and millions of baby boomers that are retiring that own small businesses. So yes, I mean, you need to line yourself up with business brokers. You need to line yourself up. You need to be able to figure out how to find off-market transactions, right? How do you find those transactions? You need to identify your buy box. But I think there's an abundance amount of businesses available for sale. And if you're looking actively every day, you're going to find opportunities. It's just in real estate, right? Like people say, oh, there's no deals out there. I can't find any houses to flip. Well, there's a lot of people that are, right? And they're just being creative on how they're sourcing deals. So I think the people that get creative within the business buying space and that are finding these deals before they get to a business broker, you're going to have huge success there. And then sometimes business owners list with agents that don't really understand business brokerage, and sometimes they misprice. I think there's opportunities there. I think there's a lot of opportunities. And the nice thing is that on business acquisitions, the sellers are more accustomed to doing a partial seller carryback. It's more common than on real estate. So you can get really creative on your deal structuring.
What's better, buying a franchise or buying an existing business?
Well, I would say buying an existing cash flowing business that's been around for 5, 10, 15 years, because you're going to get cash flow quicker. If cash flow wasn't the issue today, let's just say you're a high paid executive right now and you want to build something, a legacy, then I don't think it matters as much. But like if you're relying on cash flow, it's much easier to buy an income stream that's already proving. As long as you check out, you do your due diligence on that business, I think business acquisition makes more sense for most people. I think the ease of starting a home-based franchise is also appealing because it's a lot. Maybe you don't want to start a home service business. Maybe there's a franchise niche that's home-based. It's more up your alley. So I think I would look at both options and figure out what really aligns with the lifestyle you want and then your core skill sets.
So what's easier to get funding for, a franchise or an existing business?
I mean, if you got good credit scores and you have good borrowing characteristics, either way is pretty easy to finance. I think it's an easier sell to do a business acquisition because you're already buying a proven income stream where you have 3 years of financials showing cash flow, versus like even if it's an existing franchise brand, you're still starting up and you don't have a proven business yourself. So I would say still the business acquisition would probably be a little bit easier, but really if you're a solid borrower, you can get it done no matter what.
If I wanted cash flow from day one, should I buy an existing franchise or business?
You definitely want to buy an existing business because if it's got cash flow, you're getting cash flow day one. An average good franchise is going to take 2 to 3 to 4 years to recoup your initial investment. I've seen some that do 1 year, 1.5, but that's, a lower startup home-based type of business. But most of them, it appears, Embedded Biz is the second largest provider of franchise data, and you can research this. But yeah, I mean, there's some concepts that it takes like 5 years to repay, so I wouldn't be buying that. The average hold for a franchise business is probably 7 years, which is interesting, right? So, and then also, what is also interesting, what you could look for, is you could see what like Subways are trading for. The average Subway, something like 350 grand to start, but they're only selling on resale for 250. Something I saw in Embedded Business. So like these are all things we can research. So this is the things to open our minds to what are we looking at and what makes the most sense. But with all the entrepreneurs I work with and our colleagues of mine, it's amazing to see the ones that have gotten in. Like the other last month, I was talking to a guy who bought a tree trimming business. I think he paid $4.2 million for it, which seems like a lot of money, but it was doing $3.5 million of top line revenue. And then it's like his third year in business. He's doing 6.5. He did 6.5 of revenue last year. He's going to do 10 million this year. A darn tree trimming business. So, that's top line revenue. And then there's margins. Like there's kind of standard margins of different industries. And that's kind of like what you're making, your income, right? So he might have a 15% margin. So on every $1 million, he's netting 150 grand essentially, right? Of net SDE, seller's discretionary income. But those are just things you can start doing. But I think there's tons of opportunities to acquire existing businesses. And remember, RV parks, motels, I'm seeing a lot of people transition. They might own like 2 or 3 single family STRs or short-term rentals, but now they're going, wait, I can buy a boutique motel and use 7A financing, get 90% financing, get the seller to carry back 5%, bring an investor in for 5%. Look, you just architected a deal with none of your own money out of pocket, and you got now, based on you running this, you just bought a $200,000 or $300,000 a year cash flow stream. So, I mean, to me, I'm always looking at how can I leverage into a deal with as little money as possible, if not none of my own money, right? Because we all have to start, unless we have unless we're surgeons and we make $2 or $3 million a year, most of us don't have a lot of cash sitting around. So we got to use other people's money and leverage and use, bank and SBA financing to fill the gap. But you can literally go out and figure this out and get on a path. Use your W-2 income right now to help you qualify for the loan, but with a 2 or 3 exit plan once the business is running and you put your systems in place, then you can walk away from your W-2 job if you want, or you put a manager in place on the business and you keep your W-2 job and you just keep on acquiring businesses. So I think there's a tremendous amount of opportunity, and it's amazing that you can structure deals with very little money. And that's what's really appealing to me is that, and better yet, if you know how to negotiate with the seller and the seller likes you, and oftentimes they're gonna carry back. I'm running into people right now where they'll carry. I just talked to a guy. He's buying a tennis club, and the seller said, "I'll carry. You put down 10%. I'll carry 90% of the whole deal at 5% interest rate for 20 years."
Oh God!
Right. So you can negotiate really amazingly with the seller. So maybe if you got that deal, you don't need an SBA loan. Or maybe it makes sense because you want to do a $300,000 build out. Hey, seller, I'm going to get SBA loan. You carry back 30%, 5% on standby. I'll come in with 5%. But then the SBA allows for you to build in the repairs into the loan, right? So now I got that 300 grand so I could build out the tennis club. So you can get really creative because that's the other beautiful thing of SBA financing is you can build it. You can build into your total project cost renovation. So I find a dilapidated motel with 10 units. It's cash flowing, but it needs to be remodeled. I can add on 2 or 3 units. I can remodel it and get, double or triple the ADR, which is average daily rate, right? And so with this SBA loan, I can get the proceeds to also remodel it, boost up revenues, and then the 7A's only got a 3-year prepayment penalty on real estate or any terms that are over 15 years. So it's really, I consider it really like an amazing bridge loan with high leverage. So it's a great tool.
So you've mentioned some strategies for those of us who want to exit the corporate world and want to buy a franchise or an existing business. What are some other tips or tricks or strategies that people could use to get out of that W-2 into their own business that maybe you haven't covered already, or maybe you can cover a little bit more deeply?
Sure. So there's vending businesses you can start. You can we work with a vending company, and they'll place your machines. They guarantee 100 vends a week. So that's more of a semi-passive business where you can strategically scale up, and you spend about an hour a week per machine. So if you had 10 machines, so there's businesses like that where you could strategically scale up. And then also what I like about cash flow like that is that you also get you potentially could get, I'm not a tax accountant or CPA, but Section 179, look it up. You could offset some of your earned income potentially by buying these machines. So there's ways to kind of level up. You can, just because I start with one business doesn't mean I'm not going to own a platform of business. So I'm always thinking, well, what if I started a cleaning business and then I did some kind of senior care, right? Those complement each other. You could cross sell. So I think there's a lot of, that's what private equity firms do. They have platforms, and then they have multiple franchise concepts or business models on that because they all help each other run. So you could start with a vending route and then you add in different stuff. You could, let's just say it takes you 20 vending machines to cover all your expenses. Well, over the next 2 years, you got that business going, and then that covers your W-2 income, and then you go buy another business that you're running, 30 hours a week or 40 hours a week. Or you could just go and find a business where you could start it now, 20 to 30 hours a week. It's a semi-passive franchise, or it's an existing business. You can go and buy an existing business when it's already got the infrastructure and management in place. Really, you're just the new owner. So there's ways of doing it.
Yeah. So with so many franchise concepts available, how do people figure out what might be a good fit for them?
Everybody always says, hey, I want to do this restaurant or this quick service restaurant or this smoothie place or this and that. But really when it comes down to it, the majority of people, I think, end up aligning with something completely different than what they think when they think about franchises, they think they want to own this smoothie place. But in reality, you got to think about lifestyle. And that could be just a home-based business rather, where you might only need one employee or two employees or subcontractors. Or you could have a flooring company. They have a mobile flooring company where all you need is a truck, and the truck has all the inventory and samples, and you could be the owner operator and learn the business, and you can hire another truck and scale up. So there's lots of ways of doing it. Really, it's endless. And so kind of diving back to how do you identify the right fit? I think you have to work with a really skilled franchise broker or consultant. We use a Zoracle profile, which is basically like a disc profile, but it helps identify your strengths and weaknesses, not only for you as the potential franchisee, but the franchisor, because they know after, running so many different units, what personality types work best within the franchise model.
Gotcha.
And I think usually what happens is after you do your profile assessment and have your initial conversation with a franchise consultant or broker, they're going to have an idea of what concepts based on your lifestyle requirements, your equity, how much cash you have in hand, how much time you have, your location, and then they're going to identify 5 or 8 different concepts. You're going to review them, and then you're going to start narrowing down, hey, I never thought I'd want to own this home maintenance business. And all of a sudden you're like, wow, this business is really cool. Because maybe the franchise. So that's really the process of kind of getting acclimated. I think most people don't call a franchise broker and say, hey, I want this. I want information on, well, they might start with, hey, I want information on Smoothie King. And then they end up buying like a dog walking business. It's just, I think you never know where you're going to end up. And that's what a really good franchise broker does, is they help you figure out what makes most sense. And there's so many different concepts. You like, once you understand it, the good thing is it's a process, and you'll really get a good deep dive. And then you'll find something that aligns with your lifestyle and aligns with like your business savvy. And then, over time you'll find one that works for you. Or you just realize that owning a franchise isn't what you want to do. You want to maybe, and that's when maybe some people say, hey, vending, it's more of a side hustle. I might like that. Or, hey, I don't want to start from scratch. I want to do a business acquisition. Or maybe they want to buy like just an e-commerce online store. Mm-hmm. So there's really something for everybody, but finding a good consultant, they're going to really help you identify what those potential good fits might be.
So if you have limited cash, what would your thought process be when buying an existing business if you didn't have the equity injection required by the SBA?
So I would, if I knew I had a great business on my hand and it had nothing but upside, I would negotiate a seller finance deal of some sort. I would put it on standby. I would know that I could potentially get 90% SBA financing. And I got to look for an investor that's got 5% that would partner in the deal, or maybe 2 investors or 3 investors. Or maybe I have an old retirement plan that I could roll into a Rob's rollover plan and use that as my equity injection, which you can if it was an eligible retirement account. So I think there's a lot of ways. At the end of the day, if you find a really good opportunity, the money will come. The money will come, right? And so there's a lot of investors out there that are looking for people that want to operate the businesses. And if you're buying in a well-established business and you have maybe experience in that business, maybe not as a manager, there's investors that come in, and that's why we formed equityinjection.com, which is the model that will help on certain types of business for qualified businesses and sponsors. So the capital's there. It's just, presenting the deal, why it's a good opportunity, and the money will come.
So we've talked a lot about SBA loans, right? Can you clarify who makes SBA loans? Is it the bank? Is it the SBA? Is it somebody else?
Sure. On SBA 7A loans, there's banks, there's credit unions, and there's non-bank SBA lenders. And then there's PLP lenders, which are direct lenders. They can underwrite in-house. They don't have to send the loan off to SBA. So most of the time you're going to work with a PLP, a direct lender. SBA does not make the loans. They guarantee a portion of the loan. When the loan closes, let's just say that they're guaranteeing 75% of that total loan. The bank usually sells off that piece to investors, and they make a very, very attractive return day one once it closes. So even during recessions, these insured programs are going to be flowing even more so as recessions come, because this is the only liquidity in the market as banks tighten on their conventional programs. So I believe we're going to continue to see an uptick in SBA financing.
How do you identify the right SBA lender? Do I just go to my local bank?
That's a great question. And as a commercial finance advisor, I would say find somebody like me. It doesn't have to be me, but find somebody who works with multiple banks, credit unions, and non-bank SBA lenders. If you go to one bank, you're going to get either yes, no, and they're going to overlay the deal, and you might not be getting the best deal. What we do is we know what banks have appetite for different deals. Some banks will not do they won't do a business acquisition with no real estate. They'll say, yeah, it's all business ac. There's no collateral. We're not going to do this. Other banks will love those deals. Some banks don't like hospitality. Some banks don't like assisted living. And they, because their credit manager had a bad experience with certain food groups, they don't do that type of asset class. So I like to work, depending on the deal. If a deal comes in and there's hair in the deal, I have certain banks that I know I can get the deal done with. Versus if I took it to a more conservative bank, it's not going to get done. And then sometimes geographically, I might have a deal in Utah and I have a credit union I work with Utah. So if it's a really clean SBA deal, I'll bring it to that credit union because their pricing sometimes is better. So that's how we work. So that's why working with a commercial mortgage advisor, there's no additional fees. We don't charge you anything. The way we make money is these banks, credit unions, and non-bank SBA lenders, they're hungry for deals. And they love when we bring in them pre-vetted, awesome deals to fund because we're doing all the upfront work for them. So they pay us a referral fee. So we're not charging you anything. It's a value-add service, and 9 out of 10 times we're going to find you a better deal.
What if I wanted to start my own business? Can I still get SBA financing for a startup?
Yes, we can go up to 90% of total project cost. Most banks will overlay that, but yeah, business plan is more important. Really solid business plan, 3 years of projections. Same thing, you got to be a strong borrower showing ability to repay. If there's a collateral shortfall, they're going to look for additional collateral. But yeah, all day long. Now, not all banks like startups, but as we previously just stated, that there's a bank, if it fits in within the SOP of the SBA, we're going to help you get the deal done.
All right, Beau, I think we've covered a lot. If you have a question that Beau didn't answer, hit the comments. And if you like this video, please subscribe to our channel and hit the like button. We'll be doing more of these if you like them. Until next time.
Thank you guys so much. Thanks, Bill, for helping out, and we'll see you on the next episode.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.